Hey traders, welcome back to this week's weekly Forex forecast. Last week we did have the Independence Day, so it was a 4-day week last week. So it was a truncated week, but it was a good week. And in fact, in the members area, we had another winning week in the books. That's 13 weeks now out of the last 14 weeks that our setups have produced a positive return for members. And in fact, we are up 75% of all the weeks traded so far this year. So we're running at a 75% win rate on the week. So 75% of all weeks traded this year. So last week was a good week, specifically in buying the dip in pound pairs. Now we looked at that pound long theme in last Saturday's video, and going into this week, once again, I do like the pound long theme, but not as much as I like the euro long theme and the Swiss franc long theme. And we'll be looking at all of that in today's video in the portfolio selection. But starting with euro dollar, last week I highlighted this channel. I highlighted the fact that euro dollar was channeling, and there's 3 points here. These 2 points producing the first channel and these 2 points producing the second channel. Now, if we just simply take those and put them on the top like we did last week, I said to you guys, we're sitting right at the top of this channel. And you can see we did get a bit of strength, but euro dollar is really struggling to break through the top of this channel. It pushes up, it pulls back, pushes up, it pulls back. So going into this week, I am only looking for long opportunities once again in euro dollar. What I really like about this is the fact that the buy zone, so these two levels here, and we get quite a few people asking about these in the comments. These are automatically updated indicators within the Hedge Dash platform. I'm not drawing these on, these update every week. And in Hedge Dash also, they have the levels every single month, every single day, every single quarter, every year, annual levels as well. And when you get between the blue level and the gold level here, this is the buy zone. We call it the buy zone because this is where, in terms of the volatility of the asset, we start to see a potential reversal. So in other words, the market has moved to a point where it's essentially running out of steam. And whether you have, support or resistance or other things, the market is likely to bounce or pull back within that week. And if we combine those with key areas of support and resistance, this of course increases our odds of catching a high probability move. So that's what we're doing every single week in the weekly Forex forecast and every day with GMT members in real time. But what I want to see is I want to see this market pull back. So I want to see euro dollar coming back next week. I don't really want to be buying this into the top of the channel. I want to see it come back, breach the 1.16390, and this is where we turn oversold during the week in a market I'm looking to be long. So below the 1.16390 is where I'm going to be looking to buy the dip. And what I like about this is the confluence. We can see that just as we bounced off the top of the channel, if we can pull back, there is that nice up channel sitting right here. So this is the area next week that I'm specifically looking for euro dollar to enter. And then I'll be dropping down, looking for the bounce, looking for double bottoms, inverse head and shoulders, looking for that 1 or 2 day reversal back inside the range. Now, we may end up, having an overall bottom here. We could come back down, test it again, and eventually make our way back to the top of the channel, unless or until this channel breaks. But this bounce here in the buy zone and also trading into the support level is specifically what I'm going to be looking for next week in real time with GMT members for a 1 or 2 day reversal to the upside. Okay, so moving on to the portfolio selection, and it's quite clear to me that the euro and the Swiss franc are the two currencies that I want to be primarily long to the upside. Now, last week we were also looking at the pound to the upside, and we did get a sell-off in the pound, and it did provide an opportunity to buy the pound versus the Aussie, the New Zealand, the yen. There was a number of currencies that the pound sold off against, sold into the buy zone, and that was where I stepped in last week to be a buyer. And those trades did work, but in the process, the pound actually did start to reduce its performance metrics. Quantitatively, it's not actually as strong as it was last week. But on balance, relatively speaking, going into this week, once again, I will be interested in pound long setups, especially from the buy zone in the pound pairs that we're going to be looking at. So my primary long currency next week is the Swiss franc, followed by the euro, and then also the pound, but not to the same extent as the franc or the euro. And to the short side, once again, I'm going to be looking at US dollar to the short side. We did get better than expected jobs data, and we saw the dollar rallying. We could continue to see some strength in the dollar next week, but if we do, I'm just going to simply be using that as an opportunity to sell more dollars, because as it currently stands, the overall trend of the US dollar is still down despite, the strength we saw from the jobs data. And right now I still want to be short US dollars on balance. So any strength in the dollar next week, I'm going to be looking to fade or to short that bullish momentum, looking for a reversal back to the downside. I'm also going to be looking at Japanese yen shorts based on this. And out of these three, I mean, you could pretty much, look at CAD franc to the downside next week, Aussie franc to the downside, New Zealand franc to the downside, Euro CAD to the upside, Euro Aussie to the upside, Euro New Zealand to the upside. But out of these three, is the New Zealand that I favor because it's simply quantitatively weaker than the other two. So just bear in mind, we do also have an interest rate decision out of New Zealand on Wednesday. So I'll be looking at being involved in the New Zealand pairs before Wednesday and closing them out by the interest rate decision. Or if there are no opportunities before that, I'll be looking at trading them after the interest rate decision. We also have an Australian interest rate decision on Tuesday. They're expected to cut rates. So if you are trading, just pay attention to that. Personally speaking, I will be looking at Aussie short opportunities next week as well. But I'll be waiting until after the RBA on Tuesday in order to look for any opportunities in the Aussie pairs. So to summarize, going into next week, the pairs at the top of my watch list for opportunities are US dollar Swiss franc to the downside, Euro dollar to the upside, which we've already looked at, pound dollar to the upside. I'm also interested in franc yen to the upside, Euro yen to the upside, and pound yen to the upside. And finally, we're going to be looking at in today's video, New Zealand franc to the downside, New Zealand euro, so that would be Euro New Zealand, so euro being the primary currency, Euro New Zealand to the upside, and also pound New Zealand to the upside. Okay, so kicking off the watch list as we always do with crude oil. Now, crude oil is still on balance a short. We have, by the looks of it, had a conclusion to the Israel-Iran conflict, and we've seen that kind of ceasefire causing oil to sell off. The other thing with crude oil is we had this big dump down and now we've kind of moved sideways. Well, that's not fantastic price action, for bulls. Usually, something goes down like this and goes sideways. Very often the next leg is also to the downside. So on balance, I think there are better markets to trade now than crude oil because of this kind of dump and then just kind of move sideways. It's not great price action, but on balance, I am still looking for shorts. The other thing is there's kind of an air pocket here. There's no kind of real key areas of resistance. So for those reasons, I do think there are better opportunities, but what I'd be looking for is this. I'd be looking for oil next week to enter the sell zone, which is above the 70.30. This is where we become overbought during the week in this market. So looking to sell the rip, essentially, buy the dip, sell the rip. So this is a market I'm looking primarily at opportunities to short if we can get some strength. So I'd like to see this turn overbought above the 70.30. There are no key areas of resistance to the left. There is a key area of support here, but it's quite deep. So what I'd be looking for personally is I'd be looking for this market to kind of form its own resistance and start to fail at the highs. This is where you get that double top, head and shoulders type pattern. And I'll be looking for that 1 or 2 day liquidation back inside the range. If we breach the 74.11, this is where we turn extremely overbought during the week. So it's the second place I can look for a short to the downside if I so wish. And the third thing is, if you have a very weak market and you see this kind of moving towards the upper bound, and then what happens is it breaks through the moving average with momentum, you can look for that pullback, breaks above the moving average, pulls back, and then moves. So you can look for that bear flag setup in this case, down to the profit taking target next week at the 62.69. But I can only be short or do nothing next week in crude oil. I cannot buy crude oil next week. Carrying on with the euro pairs then, starting with euro yen. And what I'd like to see here is ideally I'd like to see euro yen breaking the top of this channel back down into the channel. Because as you can see at the moment, we started to channel. And as these markets pick up steam, what happens is they start trading above the top of the channel. So ideally, the setup that I'm going to be looking for next week, I want to see it come down, break through the channel and start to make its way back down to the bottom of the channel again. And if we can breach the 168.32, this is where we enter the buy zone. This is where I become especially interested in this market. And we also have a really nice key area of support as confluence in the buy zone around the 167.91 next week. So I want to see the top of the channel breaking. I want to see it come down. And this is the area in the buy zone next week I'll be looking for support to come in, and I'll be looking for that 1 or 2 day reversal. So why do you get that 1 or 2 day reversal? Because if you think people are selling this, and often they might be looking down on the 5 minutes or the 15 minutes, they're not looking at the bigger picture. And as we trade into this, other sellers start to book profits, new buyers step in, and as more and more sellers book profits or exit their positions, you get a liquidation. So you get basically a failed breakout to the downside because the market's, overextended to the downside. In this case, it's oversold during the week, and it's a market I'm looking to be long. So that's the setup primarily I'm going to be looking at. The 166.46 is the area where if we breach this, say we trade straight through and we breach this, this is where we become extremely oversold during the week. So we don't expect this to happen unless there's some kind of catalyst. But without a catalyst, it's unlikely that these gold levels get tested. But it is the second place. I can pull the trigger on a long position, whether I'm long already or not. And the third and final thing is, if we continue, for those of you who like Fibonacci, if we continue to just kind of trade, at the top of the channel, you can look for the breakout, moving average follows it. You can look for that bull flag into the profit taking zone next week at the 172.04. So just what works on the downside also works on the upside. So once you start to trade above the 172.04, the odds of continuing with any significant directional move are diminished. So it's a great place to book profits if you're already long during the week. Next is Euro New Zealand. Now, just remember, we've got the RBNZ on Wednesday. So I can only be long this market regardless of the outcome of the RBNZ. Now, what I like about this market is in terms of long opportunities, there are a number of nice support levels close to the first lower bound. And we have a really nice support level at the second lower bound. Now, why would I be looking at the second lower bound? Because we have an interest rate decision. If you have a big catalyst in the economic calendar, and sometimes you can get catalysts, moving markets which aren't in the economic calendar, so unexpected catalysts or expected catalysts within the economic calendar, then you can see second, upper and lower bounds tested during the week because big volatility comes into the market, right, when you have these catalysts. So I will be considering opportunities from down below here, and this is how I'll be looking to play it. If we get an opportunity to get involved in Euro New Zealand before Wednesday, so let's say we kind of get, a move down early Monday, kind of coming into Tuesday, and we trade below the 1.92227, this is where we enter the buy zone and we trade straight into this prior low. Now, usually when you have an interest rate decision, markets don't find any significant direction until the event takes place. So when you start to see, and this is actually a setup we trade with members, but when you start to see markets moving above upper and lower bounds before interest rate decisions, there's a very good chance they're going to snap back into the middle of the range before the event, because no significant money comes in really until the event takes place. And what you tend to see is profit taking. Anyone who's involved in pushing this down before the event books their profits before the event takes place, and you see a rebound the other direction. So that's the primary setup I'm going to be looking at before Wednesday's RBNZ if I can get it. And I'll be looking for a 1 or 2 reversal back inside the range. If we don't get this before Wednesday, this is also the setup I'll be looking at if we have a neutral outcome. So let's say they hold rates and it's a bit of a nothing event and the market doesn't really move in one direction or the other in any significant way after the event takes place, then I'll just revert to looking for this standard setup, which is exactly what I'd be looking for if there were no interest rate decision next week, right? So that's the primary setup I'll be looking at before Wednesday or after Wednesday if we have a neutral outcome. If we get a positive outcome for the New Zealand dollar, then this is when you can see, Euro New Zealand blasting through these support levels. Let's say, again, I don't see them doing this. I'm not saying they're going to do this, but I'm giving you a hypothetical. If they came out and unexpectedly raised interest rates, right? That's an unexpected catalyst. And you could, in that scenario, although I don't think that's going to happen, but in that scenario, you could see strength coming into the New Zealand dollar. And that's the kind of unexpected catalyst which can drive, a market like this into its second lower bound. So if that takes place, even though I don't think it will, then I will be looking, do we go straight through these support levels like a hot knife through butter? And if we do, this is still, even with the bullish catalyst, this is still where I'd be looking for that 1 or 2 day reversal. So that's what I'll be looking at post the RBNZ in not just this New Zealand pair, but all the New Zealand pairs, if we get a bullish outcome. And if we get a bearish outcome, and the market comes down, it's just chopping around, that's when you can get the New Zealand dollar selling off. So Euro New Zealand rallies, you see this often during the week. Anyone that's been trading for a while will see you get interest rate decision and you can get that kind of momentum move straight off the bat. That's when you can step in, you know, with your Fibonacci or with your bull flag setup post interest rate decision, and the profit taking target to the upside would be the 1.96195. So in any scenario, I can only be a buyer of Euro New Zealand next week. I cannot sell this market. Next is Frank yen. I can either be a buyer of this market or do nothing. You can see this is another market surfing the top of its channel. So what I would like to see is, I would like to see this, like we were looking at earlier, I'd like to see this fail. I'd like to see, you know, the market coming down and entering the buy zone, which next week is below the 179.99. We also have, and there's another one over here, two really nice support levels just below the 179.99. And we also have the bottom of the channel down here. So if we start to break down quite sharply and we do this, this is going to be a great place next week. You could say between the 179.99 and the 179.60 to start to look for sellers to fail and for a bounce back inside the range, and also a bounce off the channel bottom, looking for a 1 or 2 day reversal. So each week I'm trying to capture 1 to 2 days worth of movement out of each of these pairs that we're looking at. Now, not going to catch 1 or 2 days out of every pair, but looking to see which ones set up and seeing if we can, out of the ones we get opportunities in, capture 1 to 2 days. So that's what I'll be looking at next week. If we end up down below the 178.09, as always, this is where we turn extremely oversold during the week. So again, don't expect this to happen. It's more of a kind of emergency level or a plan B. You know, if something really unexpected happens, I can also pull the trigger on a long position from below here. I can pull the trigger for a second time if I so wish. And the third and final thing would be, you know, if we just continue surfing the top of the channel like this, and instead of breaking down, we break up, right? And you get the moving average following it. Then you could look for that bull flag setup above the 183.79. That's the profit taking zone next week for longs. But ideally, this is what I'm looking for, personally speaking, next week. And the final franc pair is New Zealand franc. So exactly the same setup with all the New Zealand pairs with the RBNZ next week. What I'll be looking for is, I'll be looking for an early opportunity where New Zealand franc rallies to start the week above the 0.48752. We enter the sell zone, and this is the high right here. The 0.48960, I'll be looking for buyers to attempt to break, and this is where I'm going to be looking for a failed breakout, a liquidation back inside the range. So I'll be looking for that setup specifically before Wednesday. You know, intra-week breakouts ahead of interest rate decisions are not a good idea because the market can just chop you around. So that's the setup I'll be looking for Monday into Wednesday's RBNZ. If we don't get anything, you know, if it just kind of moves sideways, then after the RBNZ takes place, this is what I'll be looking for with a neutral outcome. If we get a really strong outcome, although that's unexpected, if we get a really strong outcome, very small chance that it happens, but for whatever reason, we end up blasting through the upper bound. And let's say we get to this level, you know, and you're watching it post RBNZ. And you're looking for momentum to slow. You're looking for, you know, double tops, or you're looking for reversal patterns at this level. And instead it just goes straight through with momentum. Kind of flags, and then it goes up with momentum again. This would be the second place, trading into these highs above the 0.4936. This is where I would consider a short position after a bullish catalyst in the RBNZ next week. And the third and final thing is that we may just chop around like this. You see this often. And then the interest rate decision takes place and you get a sell-off in the direction of the trend, right? That's where you get your kind of Fibonacci or your bear flag setup, follow through setup down to the 0.47522. This is the profit taking zone next week in New Zealand franc, but I can only sell New Zealand franc next week, regardless of what happens with the RBNZ. Okay, so wrapping up the Forex universe with the pound pairs before we move on to gold and silver. And I don't like pound long as much as I do euro long and Swiss franc long. If I can get those, I will prioritize those long positions over pound longs. However, that was the case last week, and it was the pound that offered some really nice opportunities to buy the dip after a strong sell-off. So going into next week, I mean, you can see pound dollar actually looks to be forming this bear flag. We had this momentum sell-off. Now we're getting this bear flag, and we're actually getting that setup. What I was talking about, you break above it, and we're kind of consolidating, and then you start to move away. So this looks like a kind of bear flag setup. But what I would like to see is, I'd like to primarily see this coming down. Next week, if we can take out the 1.35060, we enter the buy zone and we retest the double bottom breakout point. So this is where we've got confirmation of a double bottom. It breaks here, we actually looks like we go to the 1-to-1 target. You see some profit taking, then we get a second leg, and then we get a double top. So what I'd like to see is this to come back, enter the buy zone, which is where I'm going to start to look for long opportunities and trade into the double bottom breakout point. This is where I'd be looking for profit taking to come in and new buyers to step in. Now, I'm personally going to be looking for a 1 or 2 day liquidation back inside the range. That's what I'm going to be looking to get paid on next week in pound dollar if we can get it. If we end up all the way below the 1.3363, now why would that happen? We'd have to have a really bearish catalyst for the pound or a really bullish catalyst for the dollar. Could this happen, from follow through of the jobs data last week? Seems unlikely, but if we were to come down and take this out, there is a low here and there's also a nice low over here. So as a backup plan, as a kind of plan B, below the 1.3363 is where we turn extremely oversold, and I can also look to pull the trigger on a long position. And the third thing is you could look for this to come down. I would imagine this is probably going to come down, at least take out the prior low, because we're setting up this bear flag. But let's say it comes down, we take out the prior low, and then we start to see momentum coming in before it takes out its lower bound. So that's where you get the fast market, and you can look for the same thing but in the opposite direction. And what I like about this is we have the prior high sitting at the 1.37910. So the prior high is also the point at which we turn overbought during the week. So any long positions, that's a great profit taking target next week in pound dollar. Next is pound yen. Now just starting zooming out, this was where I highlighted last week for a potential buy opportunity in pound yen. The pound sold off. We entered the buy zone last week. So we turned oversold during the week in a market. I said to you last week I was looking to be long. And we bounced at this major prior high. And look at the liquidation that we got. That's exactly what I'm talking about. And although I didn't pull the trigger on pound yen, I almost did. I did pull the trigger on 2 other pound pairs. And this move up in the pound pairs was primarily how I got paid last week. So looking again for opportunities to long side in the pound. This week, however, I'm looking at 2 different support levels. So if we can get pound yen coming back down again, once again, I want to see it enter the buy zone first, so 194.55. That's when Hedge Dash alerts me and I begin to look. So I get told with an alert in Hedge Dash, this market is oversold. I come down, I look at it, and I'm going to be looking at these lows here. So I'd like to see pound yen come down, breach the 194.55 first, turn oversold during the week, and that's where I'm going to be looking for this kind of opportunity. Notice how we got the big explosive rally after we turned oversold during the week. So that was the opportunity last week. We turned oversold to buy the dip. So I want to see that exact same thing again. And these are the support levels at the 194 and the 193.75. I'm going to be looking at timing a potential failed breakout to the downside. So these are the levels that I'm looking to time a reversal from next week. And I'm going to be looking for a 1 or 2 day liquidation back inside the range, just like this last week. If we end up below the 192, this is the second place. There's a really nice support level here as well to time any kind of failed breakout to the downside. So I can pull the trigger for a second time, or if we go straight through, this would be somewhere I could make an initial long position. But again, I don't expect it to come down there. You'd need some significant catalyst. And the third and final thing, as always, you get a fast market, so it starts to make its way down. Then you get the reversal. Moving average follows it. You can look for that bull flag setup into the profit taking zone next week at the 199.67. And the final pound pair is pound New Zealand. So again, I can only be a buyer of this market. I can't sell this market next week. And I would ideally, one of the best setups would be if we could come down, take out the 2.2290 and also trade below this low before the RBNZ. If this happens on Monday, or Monday going into Tuesday, this is going to be a place I'm going to be looking for profit taking to come in before the RBNZ. That would be great. If we get nothing happening and then the RBNZ and we get a kind of neutral outcome, not anything significant happens on the event itself, then I will just go back to looking at this as a standard setup as if there were no real interest rate decision anyway. So that would also be the kind of neutral outcome from the RBNZ, that kind of setup I'd be looking at. If we get a bullish outcome from the RBNZ in terms of the New Zealand dollar, of course, that could, because it's a catalyst, could push pound New Zealand down to the 2.20854. So again, put yourself in that scenario, you wait for the RBNZ, then you get a bullish catalyst for the New Zealand. So as soon as this starts to sell off and you enter the buy zone, you're looking at this level, you kind of want to ask yourself, is this going to go straight through this? That's where you can wait patiently. If it goes straight through with momentum like this, you can anticipate the pullback, and then a move down to here, and that becomes first position, right? But if we come down and we test this and we start to fail, then you can look for buyers, to start to come in. So that's what I'll be looking for post RBNZ if we get a bullish outcome for the New Zealand. And again, as we looked at before, if we get that bearish outcome, probably just get this big kind of channel breakout, right? The moving average will follow it. Moving average is a bit like a dynamic trend line. And then the bull flag set up into the sell zone or the profit taking zone next week in the 2.2700. And of course, in this case, this high over here, in terms of timing, any profit taking would probably be a fantastic place to look to book profits above this high. Okay, so wrapping up the video with gold and silver. Now, last week I was looking for gold shorts, and I did actually take a gold short last week. We saw gold pushing up. It turned overbought during the week, and I did short it around this area. I can't remember exactly where. But I shorted it in this area, and then we came down, and we also got a sell-off on non-farm payrolls as well to finish the week. So coming into this week, I've put two levels on here because you could really be long or short gold because the dollar's weak, but gold also is not responding in a very bullish way. So on balance, I would once again prefer shorts, but if gold comes down, takes out 3248.83, you could also look for long. So instead of looking at the intra-week breakout, we'll look at this kind of as a range trade. So more being reactive rather than trying to predict what gold's going to do. I'll make the statement that if gold can break above the 3406.48 and it takes out this high, the odds of a breakout above this high are low. So I would be looking for a potential short in that area for a 1 or 2 day liquidation. And if gold comes down and takes out the 3248.83 in the buy zone, because this is a market that's kind of ranging. So if you're moving sideways in a market, you can short resistance and buy support because it's ranging. But if you've got a strong market, selling resistance is a bad policy because this market can fly in your face. If you have a weak market, buying support is a bad policy, right? So you filter those out. In short markets, you sell the rip, and in long markets or bullish markets, you buy the dip. And when you've got ranging markets, that's when you can sell resistance and buy support. So in gold, if we breach the 3248.83, I would also be looking for a potential failed breakout back inside the range for a 1 or 2 day reversal. And as usual, if we break through here and take out the 3474.87, this would be where we turn extremely overbought, and this is where we'd turn extremely oversold. So both of those areas, depending on whether we enter the buy or the sell zone next week, would be places where I could take a second position if I so wish. But primarily looking for either this low or this high to be taken out next week, and for a range trade back inside the range in gold. And last but not least, we have silver. Now, we did look at the fact in last week's video that silver had traded into its monthly upper bound, and that's what was kind of capping it. Now we're into a new month. We can see the next leg up, new monthly candle forming. So unlike gold, I would not want to be short silver. I can only be a buyer of silver. I would like to see this come down, enter the buy zone next week. There's really nothing but air until we get to these levels here. So it's quite deep in the buy zone, which means that the first thing I'll be looking for is for silver to form its own reversal patterns. So it forms a support level and then it starts to fail at its own support level. If we just come all the way down, let's say we trade into here and we flag, and instead of failing and forming another bottom, we have another bear flag down, and then we hit these levels. So if we do come down to here, this would be a great place. But I suspect if we trade below the 35.15 next week and turn oversold, that will probably end up reversing back inside the range before we take these levels out. So the next thing is, of course, we turn extremely oversold at the 33.37, so it's the second place I can pull the trigger if I so wish. But the other thing you can look for is the breakout, because we've been moving sideways. This is actually, kind of capped in a range as well. But instead of shorting the highs, because overall it's doing this, I would be looking, either for it to turn oversold, so that's my preference, and start to look for long opportunities. Or if you like those intra-week breakouts, look for a break, sort of crisscrossing the moving average, then a strong break with momentum, hugs it, similar to this. See how it doesn't have to touch it, but it breaks up and then it consolidates after this kind of sideways move, and then you get your bull flag. Sideways move, breakout, consolidates, and then bull flag into the profit taking zone next week in silver at 38.70. So I can only be a buyer of silver next week. I cannot short silver under any circumstances. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.